if we're right on what's going to happen to auto prices, the average EV will be in the $20,000 to $25,000 range.
What would it be like to hear an inspirational quote from your role model, especially if you're an investor? This Cathie Wood quote might change the way you invest. Cathie Wood, who was nicknamed Mama Cathie by her fans, gained enormous popularity in 2020 after she grabbed a 153% return for her investments. Additionally, her frequent appearances in the media, where she demonstrated her investment ideas, added more value to her audience. Now, she's coming with a positive perspective on Tesla stock, which she identified as one of the greatest opportunities to have in your long-term portfolio. Imagine you're going to look for a better opportunity to invest in. You were currently looking for a better opportunity to invest in ARK investments and identified them as having been purchasing a huge amount of Tesla stock. By looking at the stats, you came to know that ARK funds have purchased 216,682 shares of Tesla for $35.2 million. However, we have seen that poor profits and price reductions have contributed to the fall in Tesla's share price. Additionally, with the news of the closing of the company's German production following a fire and controversy surrounding Chief Executive Elon Musk's salary, the share have dropped 34% in 2024. Due to the slowing rise in demands for electric vehicle sales, investors are also disappointed with Tesla's poor performance. Still, Cathie Wood sees Tesla as a better company to invest in.
Can the company not raise money?
Sure. Oh, it can raise money. I don't think Elon wants to do it at this valuation.
In recent years, Wood has been frequently buying Tesla share at a discount to show her support for Elon Musk and his drive to produce non-polluting internal combustion engine cores. Did you know that Tesla is the second largest stake in the ARK Innovation ETF after Coinbase Global? However, if Wood continues to purchase Tesla like a treasure, then we might see Tesla as her top investment portfolio. After reviewing ARK Innovation stats, we were curious to know what made them purchase this much Tesla stock. But before jumping into that, we need to know Tesla's performance in 2024. They have been facing declining sales growth and deteriorating profit margins since 2023. We have also seen that in order to keep up with demand, Tesla has been spending a majority of 2023 reducing EV pricing. Hence, we can see that after reducing sticker pricing, the Model X is now eligible for $7,500 federal tax credits despite the decrease in demand. Imagine you're a person who always tries to identify cheap buying opportunities, even though the materials might not be useful for you at that time. But have you ever thought, still you're losing money for an unnecessary purchase? If you take a look at history, many brands have used this strategy to manipulate consumer spending, and Tesla's story wasn't different. Even with low demand, Tesla has no trouble selling automobiles. In the fourth quarter, the sales increased by 20%. Then, what caused the problem? You might have heard the quote, "Karma moves in two directions." If we act virtuously, the seed we plant will result in happiness. If we act non-virtuously, suffering results. In the case of Tesla, the result was unhappiness. It was caused by steep year-over-year reductions in average selling prices and the ongoing change in consumer preferences towards the less expensive Model 3s and Model Ys. Moreover, Tesla has been lowering prices faster than any other brand can. And guess what is the result? They were bound to suffer. Surprisingly, the stock made its way to the top by surging its stock value. However, that didn't last long. There is growing confusion among analysts that Tesla's first quarter result will be weak in 2024 since the company is providing huge promotion to buyers, hoping that they can increase sales by the end of March 2024. According to Bernstein analyst Tony Sakunagi made a drastic prediction for Tesla's share in 2024. He lowered his price target for Tesla from $150 to $120. Additionally, he started projecting earnings for 2025 of $2.22 per share. And we can see that is much less than what Tesla made in 2022 and 2023. Moreover, it is less than $3.67 per share, as the analyst predicted. You have been analyzing all these stats from Tesla, and a lot of information has started to cause some confusion. Hence, that can be the time when you can take investment advice from experts and clarify your doubts. Wood has no problem in investing in a stock that has lost over a third of its value in 2024 alone. Will you be ready to include such stocks that created a dip in your portfolio? Do let us know in the comments. Now you have an insight that one may consider investing in stocks that have created a dip recently. However, are you keen to learn more and hence are looking for more insights? Or are you a person who unthinkingly invests in something just because it creates hypes in the market? Then you might be already out of your investment game. You might have heard about the hype in Dogecoin created by Elon Musk. The hype made the price to top the moon very quickly. But the retailers didn't know that it was a strategy of pump and dump. Many has lost their money, making them blame the market. Does that mean that Tesla might follow this strategy and force your money to lose? Anything you've learned regarding the high hypes of electric vehicles is off the record. According to Cathie Wood, EV adoption is still in its early stages. The asset manager projects that the number of new battery-powered cars produced in 2018 could increase by a third annually, and they will reach 74 million in 2030. But do you know what is surprising? Merely 10 million EVs were supplied to consumers in the previous year. Does this mean people started to analyze the market despite the huge hype for EVs? According to the research from ARC Innovation, EV pricing should fall as battery costs continue to decline, potentially leading to exponential growth in unit sales. Moreover, if we assume an average selling price of $20,000 per unit, that adds up to an annual revenue of almost $1.4 trillion. Wood predicts that they will keep a tenth of that as profit before interest and taxes. As we say, every coin has two sides. It is not different in the case of EVs. The negative aspect is that it would almost eliminate demands for automobiles with internal combustion engine by 2030. Moreover, there will only be 100 million new vehicles sold worldwide, which is barely more than in 2017. ARK Invest also cautions that this could result in a death spiral for responsible vehicle manufacturers. After hearing about the new insights from ARK Invest, now you are giving a second thought before making your investment in Tesla shares. Moreover, you understood that knowing one or two parameters might not work, especially when it comes to investments. Now you are looking for the rest of the insights from ARK Invest that can help you with your financial journey. Wood is well known for her passion for moonshot technologies, which are predicted to replace current ones in 5 to 10 years. She purposely hires research analysts from specialized industries rather than traditional Wall Street backgrounds in order to better predict trends. Seems like she is building a team that almost predicts the future of stocks they are investing in. When it comes to insights regarding the EVs, we can see that Wood's team are not backbenchers. Rather, they have a clear idea of what is currently happening in the EV market. Wood's company acknowledged that a lot of EV producers are having trouble growing at a profit. She added that only Tesla and BYD have demonstrated this far, and they're able to cope with the operations quickly enough to reach the cost advantage that their rivals can only dream of. The report from ARK Invest also stated that many are stepping back from the market because the already profitable industry leaders are slashing prices rapidly. They also mentioned the postponement of some EV expansions planned by General Motors, Volkswagen, and Ford. Even though we say one shouldn't invest based on news, so many of our investing decisions are based on this. However, getting information from top investing firms like ARK Invest can help you a lot in your investment journey. Wood predicts that Tesla would reach $2,000 in 2027, which she referred to as Tesla's ChatGPT moment.
Price target for our stock for 2027 was roughly $2,000.
She also said that when Musk figures out autonomous driving, by then she would be recognized as a star investor. We can see that Wood is holding very good long-term results. Her firm has $7.6 billion in assets and has produced a 29% return over the last 12 months. Now you are a master in your investment journey with the help of Cathie Wood. Now you are constantly watching the updates from her firm, hoping that you can learn more from their inspiring team. Hence, you identified one of her interviews with Bloomberg Surveillance. Wood stated that in order to grow their EV business, she and her team anticipate traditional manufacturers would jump into the electric vehicle market. However, by surprising her, seasoned manufacturers like Ford and General Motors have chosen to lower their EV targets rather than follow this pattern. It seems like Tesla grabbed this opportunity to top the EV market by cutting the cost of the EVs. We can wait and see how this decision is going to affect Tesla's growth. And that wraps up our insights journey with Cathie Wood's striking proclamation: God won't give you a better chance to get rich. And if you're keen on discovering more thought-provoking insights, consider subscribing to our channel. Thank you for sharing this time with us.